March 2020 changed my financial life, and I want to tell exactly how, because I think it's about to matter again. Bitcoin was sitting at 3,800, toilet paper was being stockpiled, and I've been in crypto since 2017, so I'd seen 80% drawdowns before, but this one was different. The asymmetry was unmistakable, so I went all in. No guide, no playbook, just pattern recognition, and a lot of sleepless nights. Now the headlines are screaming COVID 2.0. Again, maybe it is, maybe it isn't. And honestly, that's not the trade I'm here to make for you today. What I'm giving you is the playbook itself, because whether Hantavirus turns into something or whether the next one does 2 years from now, the framework is the same. The trades that printed across crypto and stocks, the traps that broke retail, and the signals that mean it's actually real. One thing before we get into this is educational content, not financial advice. I'm sharing what I learned based on my experience. Your decisions are yours. So today, we are going to talk about the pandemic playbook. And let me take you back to March 2020, to 5 days that broke everything. Between March 19 and March 13, every single asset class collapsed at the same time. Bitcoin lost 58% of its value, went from $9,000 to $3,800 in just 1 week. Ethereum was even worse, down 65% from $2,030 to $80. The S&P 500 down 34%, the fastest bear market in history. And the VIX, which is the fear index, exploded 507%, from 13 all the way up to 82, the highest reading ever recorded. Here's what those 5 days actually killed: the idea that crypto was uncorrelated, that all thesis gone. Crypto crashed harder than equities, gold dipped, oil collapsed, nothing, and I mean nothing, was an edge. But this is the floor. Every recovery we're about to see, it all starts right here. Now, let me walk you through what happened next, because this is where the divergence really starts. 6 weeks after the crash, Bitcoin had already clawed back to $9,000. Ethereum was at $2.45, and you still think $2,000 are cheap. The S&P, most of the drop had recovered, but by December 2020, 9 months in, Bitcoin was at $29,000. That's an 8x from the bottom. Ethereum, 736, which is a 5x. And Costco, the defensive name everyone overlooked, was up 43%. And then there's Kimberly-Clark. Remember the toilet paper play that everyone panic bought in March? It was down 4%. Even I've been joking with the toilet paper now. If you follow me on X, you know that. But by April 21, Bitcoin hit its first peak, 64,000, a 16x from the bottom. Then in August, Moderna peaked at 484, and 19x in 18 months. And by November, crypto top. Bitcoin, the famous 69,000, Ethereum 4,800, and Costco 555. Now look at the gap here. Bitcoin up almost 1,700%. Kimberly-Clark down 2%. Same pandemic, same starting point, completely different destinations. And today, let's see where we are. May 26, Bitcoin is at 18K, Costco is at 1,019, Kimberly-Clark fell below entry. This to show you that the asset matters more than the catalyst. That's the lesson. So every asset that mattered through COVID, and I mean every single one, fell into one of 4 archetypes. And knowing which one you are trading is the difference between an 18x and a minus 94%. And this is what I'm going to show you now. The first archetype is what I call the compounders. Bitcoin, Costco, Amazon, Walmart. The behavioral shift locked in, every dip got bought, every rally extended. If you held one of these from March 2020 through to today, you compounded the entire cycle. 18x without ever needing to time the exit. The second archetype is the high beta winners. Ethereum, Moderna, BioNTech, right thesis, brutal timing. The trade pays massively, but only if you exit on the catalyst. Ethereum was up 60x, 60 at the peak. By 2024, it was down 76% from there. Right reason, wrong hold time. And you end up with the same losses as people never bought. The third archetype is the bubble round trips. Peloton, Zoom, DocuSign, Netflix. This is where behavior reverse and retail piles in late. And you get the textbook bag holder trade. Look at Peloton, went from 25 to 167 to 9. Anyone who bought in October 2020 lost 94%. It's not just altcoins, see? There are stocks that drop also 94%. And the fourth archetype is what I call the quiet round trips. Kimberly-Clark, Clorox, Target, the obvious defensive play that everyone gravitates to in a panic mode. Modest pop, then a slow give back, the trap that doesn't look safe, and it isn't. Now, compounder, high beta, bubble, or quiet round tip, you pick the wrong archetype and the catalyst doesn't matter. You'll still lose. That's the harsh truth. Now, let me make this real for you. Imagine you put $1,000 on March 13, 2020, the bottom. If you put it on Bitcoin today, it will be worth 20k, round numbers. In Ethereum, 70k. In Costco, a stock you could have bought from your retirement account, 3,600. On the S&P 500 ETF, 2,900. But look at Moderna, the vaccine maker that hit 484 at peak. Today, that 1,000 is worth 1,120. It round-tripped almost the entire gain. And Kimberly-Clark, the panic buying tissue play, $710, less than your entry. And Peloton, down to $360, minus 64%. Again, it's not just altcoins. Now watch what happens if you exit at the peak. Bitcoin 18k, Ethereum 37k, Moderna 19k. And this is the gap, right here, between today and the peak. And this is exactly what most retail did. They held too long, they watched the gains come and go, the compounders kept compounding, everything else gave back. And what if the next one is real? What if the Hantavirus is real? I'm going to give you the playbook for stocks right now. 6 sectors, 5 winners, and 1 disaster, the short, the ones that we are going to short. Vaccines, Moderna, BioNTech, Pfizer, highest bet, highest reward, but the exit timing is brutal. Then you have diagnostics, Abbott, Thermo Fisher, Hologic. This is the first revenue wave because testing always scales before vaccines do. Then retail, Costco, Walmart, Amazon, best historical risk reward. They capture volume without capacity constraints. Then you have pest control, Rollins, Rentokil, and this is the angle that 99% of investors might lose if they compare to COVID in 2020. Hantavirus is a rodent born. The vector matters and these companies benefit directly. Then you have the tissue pulp, Kimberly-Clark, Suzano, low beta value play, modest returns, trade it, don't hold it. And then there's the avoid list, cruise lines, hotels, life insurers. These are always negative in a pandemic. Carnival, Marriott, MetLife, these are the shorts, not the longs. And then there's the crypto playbook. 3 patterns to watch. The first is our store of value. It's just Bitcoin. You already saw the journey. Crash, recovery, new all-time high, repeat. That's the pattern. Bitcoin is the compounder of compounders. Even when it crashes hard, the recovery rewrites everything. The second one is high beta layer ones. Ethereum, Solana, XRP, Hype, same shape as Ethereum, just different cycles. Bigger upside, harsher unwind. Again, bigger upside, harsher unwind. Highest reward, brutal volatility, and the exit discipline here is non-negotiable. And then there's the third pattern, and that's narrative rotation. In the past, we had DeFi summer, NFT mania. AI tokens, meme coins, stimulus money plus lockdown attention created a sequential bubbles in which one ran from 50x to 500x before dying. You will see 10,000% outliers, but for everything that follows, down 99%. So trade the rotation, but never marry it. The big question today is actually the moment? Are we facing another pandemic? We are going to check this and check the actual conditions side by side. Back in March 2020, the VIX was at 82, the S&P was down 34%, the WHO declared a pandemic, lockdowns were global, and the retail was full in panic mode. Today, the VIX is at 19, the S&P is at all-time highs. The WHO says the risk is low. There are 0 lockdowns, and retail is curious but not panic. I went all in 2020 because every single one of those signals had flipped. Not one, not two, all of them. Today, those signals aren't there yet, at least not at the same level. And the difference between acting on a confirmed catalyst and acting on a developing story is what separates the trade that prints from the trade that round trips. So the playbook stays loaded, the trigger doesn't pull yet. Now, what will actually change my mind? There are 6 signals that I'm watching, and these are the exact thresholds. The first one is confirmed hantavirus cases of the cruise ship. I want to see 30 in a 7-day window period. Let me repeat. I want to see 30 in a 7-day window period. That's when I will start to pay attention. Right now we have maybe 5 cases confirmed, so the signal is still cold. Second, I'm watching from the Welfare Organization risk of classification, from low to moderate or higher. But if it moves to moderate, then I'll start paying attention. The third one is the VIX above 25. Today's at 19, so there's no risk here. Fourth is Kimberly-Clark breaking above 105 with volume. Right now is at 99, so this one is warming, but not there yet. Fifth is Moderna running plus 15% in a 5-day window. Currently is up 1%, so there's nothing to see here. And sixth is the poly-market vaccine probability above 25%. Today is around 10%. When 2 or more of these flip hot, then the playbook activates. But today, none of them, I'll literally say none of them, are grabbing my attention. But I have the plan ready. I always say, have a plan. And if you have a plan, you make money and you are okay. Now there's one last part, and it's a unique edge for us crypto native traders. There's a wallet that bridges both halves of this playbook. And here's the thing, for the first time you can run this entire framework from one self-custodial wallet. One seed phrase, every chain that matters, and that's MetaMask. You can trade X stocks, you can trade prediction markets, all from the same place. And with your profits, you just load your MetaMask card. And I'm going to show you. If I go here to trade, and I go to perps, and we have been talking about Costco, we have Costco here. Let me just research. Here we go. You can see? Everything that I told you is here on the MetaMask wallet. And you can go to prediction markets. You can trade Apple, Tesla, MicroStrategy, Costco, Coinbase. Everything is tradable on MetaMask and even the poly market. If you think that the pandemic is going to be declared, you go there to the prediction markets. So remember that the poly market vaccine probability I mentioned a minute ago, you can actually trade it and bet on whether the WHO upgrades the risk of classification, bet on the vaccine approval. Hedge or front run the playbook directly through the same wallet you use for the stocks. The infrastructure is final here. One wallet, both sides of the trade. So here's what I want you to take away from this. The playbook is ready, the signal isn't. Save this video, subscribe to the channel, because when the conditions trigger, and at some point they will, the trade is the same one Bitcoin's made at the floor or at the bottom, and the same one Costco holders made at $282. Do the work now so when the moment comes, you don't hesitate. Until then, remember, data over noise